in here with the traders. Welcome to the market update. Hope you guys are enjoying your weekend, and I'm doing this on December 1st, so we're just entering into December trading here this month. I can't believe the year is almost over here. We got one more month to go. And something that I like to say a lot, and I actually talk about a lot about this with my members, is that market is not worth it. Market is not worth to steal your joy away. You know what I mean? You should not let the market affect you emotionally and steal away your joy. You see, the market always have shenanigan. It goes up and down. There's always volatility. I mean, if you rely on the market for your happiness, if you rely on other performance other than yourself, like if you rely on, you know, how the market is gonna do for me to be happy for this day, or you know, you're relying on other people to treat you better for you to be happy, right? If you live that way, you're gonna live very sad and depressed life because you're relying others for your happiness, right? The happiness is something that you decide to be happy regardless what you go through. There's always somebody somewhere going through much more. Oh, sorry about that. Much more. That was my editor, and right now putting video together for my members. Anyway, much more difficult thing than you are, you know. And so, you know, I just see so many people down when the market is down. I just see so many people depressed when the market is down, and then when the market is up, they're happy. I mean, do you really want to live that way? You know what I mean? Like, this market is like a drunken cycle, like Mr. Buffett said. It's a drunken cycle. Do you really want to rely on drunken cycle for your happiness? You see what I'm saying? So this is one of the reasons why I love position trading, and then also my active investor, meaning I do have a whole, you know, big portion of my portfolio invest in the individual equities since mid-2016. And so, you know, obviously I'm much longer term than most people out there that you see on Twitter and Stock Twitch. And I love the fact that I don't have to be so emotional and always being, you know, be rattled and always live life fearful, you know what I mean? So anyway, today let's keep things simple. Last week I did a special Thanksgiving analysis, about 45 minutes here. I've done long-term analysis in that video, so you can go ahead and watch it for a longer term, major primary term analysis. But we'll stick with Spider, Diamond, and Qs today. And let's kind of follow with what we've been talking about last week here. So we talked about how there is certain support levels that I've drawn here. I've been, you can see, let's go back here. So you can see just connecting these two dots there. So there was a support coming from that. And then so we've been tracking these rising supports and rising pivots for weeks now. So you can see there's a long wick that came down intraday, but then got back up here, held above it. And then we got up and pulled right back in. And then there's some shenanigan happen here. Oh, let me put this thing together better. Put it down like that and put it down here. So we close. So this was 20. So those are right before the. So December, that November 23rd. So that was 23rd here. That was a Friday. So when I did my video last Friday, right? That was that day. So. Ever since then, we have this gap here, right? So we got that gap. So that's, you can see that gap with the box there. So that was closed, that's open. And then we saw another gap. This was what? Monday, Tuesday, Wednesday, right? This is Friday, Thursday, and this is Wednesday. If you actually go to intraday, this gap is actually open. Let's actually go to it. Let's go here so you can see. So the gap, it actually is open slightly, and that matters. This matters because there's an air pocket there. So this is a reason why I have this thing right there. right? So you got those gaps. So that gap is actually open, right? Intraday. And we're now back above the 20. And then 50s there. 100 is still hovering around 280s, right? Remember last couple times, 100 SMA here. We tanked. We got up. 100 SMA there. We tanked again. So it looks like buyers want to kind of retest that area once again here. You can see that, you know, I've drawn this downtrend resistance. We're slightly above it, but I don't pay attention too much to it. We do have this downside gap here, and then we also got the little bit bigger downside gap here from 280 since early November. So you can see those two gaps are going to make things a little bit hectic here. But I think the good news about it is, you know, we do have daily bullish divergence. You can see this is a very, very similar to 2016, right? So if I go here, do that, and you can see very, very similar here. You can see, and it's funny about this pattern is that you can see it's been making higher lows while the spider making lower low and equal lows here. You know, actually when you go to Qs, you can see that on the Qs, we actually got 3 lower lows while we have a higher low, 3 higher lows. Do you see this? Right? We saw something like that in 2016 as well. Right here, right there. Lower low, higher low. We see that? And then, look at that. Lower, lower, lower. But man, this is so adamant. You see that we got higher lows here, and that is pretty bullish signal. Obviously, any indications, any setups, it needs to confirm. I think it needs to at least get above 175 and 180. And then it needs to start cultivating higher lows for a full confirmation. But this is an initial signal here that could potentially generate bullish momentum. Looking at that bullish divergence there while the price was making lower lows on the Q. Let's go back to Spider though. So spiders, you can see we got these two gaps open. That's a good sign because we didn't have their gaps here, right? These two gaps were there, and those gaps were filled, and so then there were no more upside gaps. And then there's a bearish gap. This was a pretty big gap. I think a lot of people were panicking at the time, but that turned out to be a bottom so far, and bulls made another open gap. Actually, if we go to Dow Jones Industrial, we actually have island reversal. Let's actually do a little bit of a maintenance here. Those green boxes, let's get rid of that, right? Those green boxes, I purposely didn't change these so I can do it with you guys. So those are green boxes, right? So that means that's island. That's an island reversal. We can also be lenient with this, right? It can go like that. Be a little bit more lenient with these right here. So you can see, let's get rid of that for a second. You can see Dow Jones is the only index. Where is it? Where is the right there? So we got this lower high there, right? So that's the downtrend resistance currently we have in the minor term. And then you can see, okay, my phone is acting really weird. It's like so weird. My iPhone sometimes it's just see it just comes out of nowhere when I didn't even say anything. Anyway, so diamond here, you can see this is the only index that we have an island reversal. You can see this gap down, gap up, textbook island, another island. We got 2 island reversal back to back. Let's just make the whole thing green so we know that this vicinity is an important vicinity for the buyers, right? island reversal, it is a very, very crucial reversal pattern, especially when you feel it with bullish divergence we've been talking about on the daily chart, especially when you feel it with all the weekly, monthly, long-term supports that I've been talking about in my long-term analysis video, which I've done, Thanksgiving weekend, and I'll put that video at the end of this video so you can watch it if you haven't. And this island reversal, I think, because we had an island here and then we got another island here, and this is more like a textbook island because that island gap still open. This downside gap is still open, this upside gap is still open. I mean, here it has island reversal characteristic. Obviously there's some feelings a little bit there, but this is a very, very important level, 240 to 249. Definitely buyers are there to really protect this level. They're really, really eager to bring it up and just brought it right back up. I mean, just pretty much a counter attack, right? Bears wanted to bring it down, got two gaps, boom, boom, and then bulls bring it right back up, two gaps, boom, boom, made into an island reversal, and we're back above some of these levels here. Obviously, 262 is the prior high, swing high there, but keep in mind we do have a lower high with 262, but technically we still have higher lows, looking at more of an intermediate term here, and that's the same scenario on the spider as well. Let's go to Qs, and Qs we just looked at the we did look at the bullish divergence on the daily, and there's this gap still open. This is a bullish gap still open. Let's actually go to 65-minute chart. If that gap's open as well, this gap right here, because you can't really see it, but actually if I go to 65 minutes, it's a slightly open. It's not too bad, just a slightly open. That gap is actually remaining open as of now, but it's so tiny. Let's just not annotate that. But so we got bullish gap, downside gap, still plenty there. So obviously just looking at the chart itself looks most vulnerable. The Qs looks most vulnerable because we still have lower highs. We got 1, 2, 3, 4 lower highs, right? And lower lows. Remember, spider did equal lows. Qs did lower lows. Remember though, we just covered it. We have bullish divergence, and this is a rather bullish signal. That means that bears really made an effort to bring it down, but they're getting tired, and bulls are taking advantage of this situation and bring it up here. So a lot of times when the bullish divergence gets actually confirmed, there could be some strong bullish run from it because of this is a pivotal level that we talked about on the longer term picture, and we have bullish divergence in this area. So this is actually rather very bullish setup. Obviously for this to confirm, we want to see 174, 175 reclaiming, and then the market start to cultivating higher lows and higher highs. We don't have that yet, but that's for the full confirmation. But we have an initial evidence, initial signal with the bullish divergence that this thing is potentially ready for a sharp bullish move to the upside. So before I let you guys go, let's kind of examine some of the blog posts that I've written here. This is back in November 14th here. So this is much more long. This is looking at things longer term here. You guys remember this? Basically this 200 SMA, and when the market gets below the 200 SMA, right? And this turned out to be going back all the way to 2009 was a bull bear trap. It was more of a buying opportunity, not time to panic, which I talked about here. So again, that's from November, and this was inverted head and shoulder. This is 2010 today, slightly different, but we still have this setup going on there. And this is, I think, very, very important chart. This is a weekly chart. I've talked about this before. We've been talking about it. We've been looking at it here. You can see this is what I call rising pivot. This is a weekly chart. So rising pivot meaning prior resistance becoming new support. Do you guys remember how sentiment was? How much bearish it seemed in 2015 and 16? How fearful everybody was. I mean, it's nothing like that today. You know what I mean? I mean, yeah, there's some fear, but it's nothing like 2015 and 2016. I mean, everybody thought that the whole global financial markets are going to go to nothing. That was 2015 and 16. But if you simply understood This chart right here, you say, well, you know, I want to give benefit of doubt unless we start to see this thing breaking lower, you see. And you can see that we never did that. It actually cultivated higher lows and we actually got up here. And now exactly same thing happening here. Prior resistance is acting as new support. And then I wrote this here November 20th, end of November. You can see all of this if you just go to tradersclub.com and just click on market analysis. It's all there. Spider, be greedy when others are fearful. And so basically this is comparing 2006 to today. And look at this chart price action here. Very, very similar. You can see right here. Oh, you know what? Let's not do that. Let's just look at this here. So 2006, you can see we got some volatility. We got up, you know, even made a new all-time high and then start pulling back. Man, this definitely looks very bearish because you can see we got high, lower highs. You know, 100 SMA market doesn't even care about the 200 SMA there. We get below it, got above it, came right down. It looks like it's gonna be another low. It looks like this is gonna come down, you know, retest this low here. Probably that's what a lot of bears are probably thinking because we got a lower high, we're on a downtrend, we're on a bear market. That's what they're gonna say, or probably were saying in 2006. Well, same thing. They're saying the same thing in you know, late November. They were in a downtrend. We got this, you know, 200 SMA. We're below it. This thing coming down here. We're gonna probably come down lower. But keep in mind, during all of that, we did see this indicator cultivating higher lows there. Same thing was happening today, in which we just covered it earlier in this video. Well, what do you think happened in 2006 though? That is some nice looking move there after this setup has been completed. Remember, for this to fully confirm, it needed to get above it, right? And hold above it like that. So, I mean, if I just go back to kind of show you what could look like, you know, if you're gonna see this thing happening like 2006, you will see something like this. It will go up, pull back, and then get up. And I don't know how much it's gonna pull back. It's gonna pull back, it's gonna go up and then pull back a lot, or it's gonna go up here and pull back. You don't know, but vicinity is important, 280, 281. And then when it pulls back, we just don't wanna see this thing coming all the way down to 263, 265. We wanna see this thing kind of stopping short around 274, 273. That's what we want to see, and cultivate a higher low and then go. If we see something like that, I don't know about this year, but I think 300, 310, 320 next year is definitely coming. This year, we're very, very lucky, if market really wants to go, it's 5%. Some of this level I'm thinking here, 4 or 5%, possibly in a December rally. We'll continue to kind of follow up on that. So that was that. And then my latest article, or the blog post I wrote, was another one's November 23rd, is the Thanksgiving weekend there, right? And yeah, that was just last Friday, right? Last Friday. So make sure there's a video as well. Put this video at the end of this video so you can watch it. And this is obviously looking at NASDAQ. Looking at NASDAQ, this is a weekly chart. This is 100 SMA simple moving average. And tell yourself, would you buy it here? Would you buy it here? Right? It's always easy to look at and say, well, yeah, I mean, okay, yes, I should have, could have, would have, but I got scared. And I didn't, because I thought crash was happening. 2016, I was really scared. So I missed out on that move, and I kept trying to short, didn't work. I've been losing a lot of money. 2012, you know, people are still scared about 2008 crash, and so definitely now, well, in 2018, market is up way too much, man. It's up way too much now. I don't know, man. I don't know. I think it's gonna be this kind. I think this. You see how there's always excuse not to do something. You know, 2011 was, people are, you know, it's 2008 scare. 2016 is like, well, global financial market meltdown scare. Well, 2018, well, market is up too much now. You see? And this is one of the main reasons why, even in this bull market that we've been in since 2009, most people are not especially retail traders. Most retail traders are not participating in it. Because, I mean, everyone you probably follow, you know, who has a 50,000, 100,000, 500,000 followers on Twitter and StockTwit, none of them are showing you these kind of charts. Everybody's probably like, yeah, you have to be nimble. Raising cash. I want to see some more evidences. You know, these guys say the same thing every week. You know what I mean? Like, there's a little bit of volatility, they're always raising cash, right? You know, these same people, and I mean, I've been exposing that the same people said here that there's a warning, cautionary signal, and they all freaking missed out the most epic bullish run ever. We haven't seen this kind of move in 30, 40 years. Guess what I did? I fully ran the whole thing. I was full on bullish. You can go back and check. Go back and check on my videos. I was full on, and the reason why, because they're just always so concerned about short-term volatility. Because think about it. I mean, it doesn't look much now when you look at it, but trust me, back then this looked like, oh wow, look at this thing, man. This thing looks not so good. I mean, the market is shaky, you know. I mean, it really hasn't made a good move, and it already made a really good move since Trump got elected. Look at this thing. I mean, it's been stalling. That looks like, you know, like 2008. Yeah, like it's kind of like it's going, but it's really like not seeing strength. Oh yeah, man, there could be a crash coming. Cautionary signal, warning signal, raising cash. Looks like 2008, 1987. All the uptrend is broken, and then all these, you know, gurus and quote-unquote experts and wannabes, right? They completely missed out on this full move. That's what the market does. And then we're here, and the same people are just like scared. They're just scared out of their mind, right? And then here, same thing. See, this is the thing about it, guys. If you want to make money in the market, you know, there has to be a point where you do have to make a risk. You do have to make a trade. You do have to go for it. You know, this is a reason why when the clock is winding down, and Michael Jordan knows that if he misses that shot, he could lose the championship. But he takes the shot. And there are many times he lost that shot, but he still goes for it. That's why he is who he is. Because he goes for it. But most traders, all I see is just whiny sisses. Whiny, you know, little boys. The market is not for little boys. It's for men. It's men who has built up enough discipline and patience and a character to able to withstand certain volatility, you see. Anyway, that's for me, guys. And you guys have a wonderful weekend. And good luck trading. Oops. Good luck trading next week.